Hello, this is a Tesla technical analysis from Itai Levitin at Forex Live, and it's got an interesting lesson or guideline that I think will work out for most of you investors and traders most of the time, and that is to watch out what happen when a stock declines after earnings, in this case from the close of the day before earnings to the close of the day after earnings. It was just over 13% drop. And then we had one leg up, one leg down as this channel was forming. And this is a potential bear flag, not potential anymore because it already played out with this crossing down, meaning this bear flag is confirmed. And a lot of times, once there's a gap down after earnings, you will see this type of formation before there's more down. In this case, it took, let's see how many days. It took 39 days and 26 bars, so 26 trading days, where on the 27th it crossed down to confirm this bear flag. Although a lot of the pros would be looking at when this gap is closed or almost closed, and betting that we're also at the top of this bear flag. I know it seems like in hindsight, but a lot of gap downs you would see in earnings, you will see this sort of a type of a pattern and formation and activity. So do watch out. And the reason there's people that are heavy holders of the stock, hedge funds, Elon Musk himself, a lot of executives within the company. Some of them might know inside information. Now, this this drop is a disappointment. So they're disappointed. Now they've got a lot of stock offload. They're not going to do it all at once because they don't want to shoot themselves in the foot and dump the stock and crash the stock price, hurting the value of what they haven't sold yet. So they have to do it in steps. As well as there's other buyers that are looking for the market to wash out a bit, to wash out some of the holders before possibly going up to higher levels. And if you're looking for where to buy, in my opinion, there's an article on Forex Live. It's an opinion. Search for is Tesla stock a buy. I bet it is within these extreme dip buying plan. And I use the Leviton method for dip buying. Method that I invented is quite simple. Uses a Fibonacci series and averages out as the price goes down, and of course, as always, with a stop. But according to this plan, we don't buy. The first buy is around 163 something, okay, and it goes down, so it's around in this area, and it requires patience for the patient long swing trader. Right now, look at this also perfect retest that we've had. Okay, this is very precise. One touch point, second touch point, one at the bottom, and then we gap down, but we retested exactly to that previously broken bear flag. So now we might be taking out this low, and again, look at the you can look at Tesla stock for its live, Itai Leviton, Tesla buy on Google, and you will find my plan for buying, possibly at another extreme dip buying. And of course, as always, we have to watch out for the market as well. But if the market, for example, Nasdaq and ES, the S&P 500 E-mini futures, if it drops around 10, 15% even, then Tesla might be dumping another 15 or even 20%, which gets us to the area of the dip buying, by the way. So actually, a last washout, a last correction, or a first correction of the stock market, and signifying possibly a last correction for Tesla, okay, because we have here a high of 99. So if we get to around 150 or even just above, that's 50% lower. Some would even look at that number, exactly the half, the 150 area, as okay, this has gone down enough and it's a semi round number, and some psychology will play in there and we'll get there. So we're not there yet. And do look at the dip buying plan because it starts with 163.